From the world of politics to the world of business, this is Balance of Power with David Westin.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. As we speak, President Biden is in South Korea as part of that several-day swing through Asia. He spoke this morning at a Samsung plant, and we addressed questions actually going back to Washington to say what needs to be done back in Washington when it comes to microchips. This is what he said.
Hopefully soon, the Bipartisan Innovation Act will deliver historic federal investments in U.S. research and development, including funding for something called the CHIPS Act to revitalize the U.S. semiconductor industry.
To take us through this trip that we're anticipating, we welcome now our Washington correspondent, Anne-Marie Hordern. So, Anne-Marie, what are the goals for the administration in this trip?
Well, the first one, as the president is now day one over in Seoul, Korea, was really about how foreign policy is intersecting with his domestic policy agenda. And he was quite diplomatic there. But, David, he said before to Congress, quote, pass the damn bill. He wants this China competitive bill that has billions of dollars in manufacturing and specifically $52 billion in chips productions, chips research. He wants to get over the finish line. It's now in really a debate between members of the House and the Senate. They each passed their own bill. It's in a conference, and maybe by the end of the summer, the president will have this on his desk. But really what this trip is going to be about, and part of that chip sector, is about making sure they can shore up supply chains in America, but also make sure they're competitive against China. Now, the president might not call out China directly, but you can see in a lot of actions and plans they have ahead, they're going to. One is they have this new economic framework, which is kind of a placeholder for the TPP. Doesn't go nearly as far. It's not a trade deal as the TPP, but it's a potential way they can cajole the regional allies. But very much this is going to be difficult. Already some governments are saying we're not exactly sure what we're signing up for. But then a Quad, which is a summit, which is going to be really about security in the region against China. And then he'll be meeting with the likes of India, Japan, and potentially Australia, David, if they have a government in time.
Yeah, if they have a government, we'll find that out on Saturday. But Anne-Marie, I guess we always ask this question, how much of this is the symbolism of it, which is not unimportant, given all the attention given to Europe right now because of Ukraine. How much of it's symbolism, how much of it is really concrete results that they're expecting out of this?
A lot of it is symbolism in the sense that the president is going to be standing next to allies that have actually come to, at the U.S. request and Western allies' requests, especially in Europe, to stand with them in terms of what they are doing against Russia. I mean, you think of Japan. This is a country that is so reliant on imports of energy, and they've even stopped and blocked Russian fuel exports into their country. So you're going to see the president weave a lot of different themes as he's alongside Asian allies. Of course, it's going to be competition with China, but then also standing firm against adversaries like Russia. And then also at the same time, David, he spoke in that Samsung speech on that factory floor talking about inflation and how so much of this agenda of foreign policy needs to happen because they're trying to fight inflation at home. So he's weaving in a lot of different things. Will it resonate with Americans who are dealing with higher grocery bills and higher gasoline prices? That's a big question.
It is a big question indeed. Thank you so much, Anne-Marie. Really appreciate it. That's Bloomberg's Anne-Marie Hordern, our Washington correspondent. And now we want to come back to Washington and what's going on up on Capitol Hill, what we can expect. And we turn to Libby Cantrill. She's head of public policy at Pimco. Libby, always wonderful to have you with us. Let me start actually with something we just talked with Anne-Marie about, and that's that Competitiveness Act up on Capitol Hill. That was a bipartisan act last time I recalled. Why can't they get it done?
Yeah, I mean, good question, and nice to be with you, David. Yeah, so this bill, I mean, to Sir Anne-Marie's point, among many other things, allocates about $52 billion in semiconductor kind of reshoring, if you will, here in the United States. It passed the Senate actually last summer, if you can believe it, David, by a pretty broad bipartisan basis. And then also a different version passed the House later that year. Now, as Anne-Marie said, these differences are being sort of reconciled in the conference committee. I think, though, the really important point here is that something will pass both chambers and it will be signed into law. To sort of Anne-Marie's point, our expectation is maybe even by the July 4th holiday, but certainly by August recess, that's the goal for Congress to pass a unified bill, to get it to Biden's desk. And of course, as we all know, President Biden will very much welcome the political victory and likely the pretty big signing ceremony and trumpet, to your point earlier, just the bipartisan nature of this.
Well, exactly. It would be nice for all of us just to have something bipartisan that really is big and significant. Let me go back to another thing we were talking about with Anne-Marie, and that is that Indo-Pacific Economic Framework, I guess they're calling it, the IPEF. What is that about and how real is it?
Yes, the IPEF, if you will. Washington loves an acronym. I mean, this is more symbolic than it is substantive. Even the ambassador from the United States to Japan, Rahm Emanuel, sort of admitted that there's not a lot of clarity about exactly what this means. But the symbolism is important. This is a sort of broad economic framework that outlines areas of cooperation in health and climate and supply chain resiliency, and then importantly, in security. But this isn't like the Trans-Pacific Partnership, of course, that big, broad Asia-Pacific trade deal that that the United States pulled out of or never signed under President Trump's leadership. It doesn't necessarily involve anything about market access, about reduction in tariffs. So from a trade element perspective here, not much. But again, the symbolism is important, and it importantly reassures our allies in that area that just because there's a lot of focus on Russia and Ukraine, Americans haven't lost sight, or the American administration hasn't lost sight of the importance of this region as it relates to China in particular.
Even over in Seoul, South Korea, we're hearing the president talk about inflation. It's certainly job one for many of us these days. There are a lot of people who are asking, why don't they relieve some of those Trump tariffs on Chinese imports that could reduce some prices right away? He's over there near China. Is this the time to do that?
Yeah, and I think it's a debate, obviously, in the public discourse. It's also a debate among folks at the White House and the U.S. Trade Representative in the Commerce Department as well. I think there is. I think there is some hope that these indiscriminate tariffs on durable goods, on things like underwear and bicycles, maybe could get lifted. However, and a big however here, politically, this is quite difficult to do, just given sort of the sentiment around China among the U.S. electorate. If we see a rollback, and David, to be sure, I don't think there won't be any sort of forthcoming announcement on this trip. It probably wouldn't be until later this summer if there were relief. And I think my view is there probably won't be, just because of the political considerations. But if there is, they would be coupled with more punitive measures, with a different Section 301 investigation on other trade practices of China. So I think the bottom line here is, even if there's sort of short-term relief on the tariffs, it will be coupled with something that's more punitive and more draconian. But again, the politics don't necessarily even support a rollback of the existing tariffs.
Libby, in the meantime, there is a confirmation process wending its way through the Senate, which is particularly important to Bloomberg audience. And that is Michael Barr for that vice chair of supervision at the Federal Reserve. Where does that stand?
Yeah, he did. He had his hearing yesterday. I think by all intents and purposes, he did quite a good job in terms of navigating some of the political sort of pitfalls. It looks like he is on track to get confirmed. I think the question is just how many votes will he get that confirmation? Will it just be a 50-50 vote, or will he actually get some Republican support? But I think the bottom line here is, for the market's perspective, he will get confirmed. I think there's an open question about how far he will go on some of the things that I think the market would like to see. The adjustment to the supplemental leverage ratio, for instance, that's something that I think the market would like to see amended. But again, sort of open question about whether he'll be able to do that or not.
You got the reserve issue that you raised, but more broadly, I suspect that it's easy to get caught between, if I can put it this way, Senator Elizabeth Warren on the one hand and the Democratic lobby on the other, that wants really a lot more regulation as opposed to the banking industry. Do we have any sense of where he comes down on those sorts of issues? More regulation, less regulation?
Yeah, I think he was sort of clear yesterday that he thought that the banks were in sort of a good capital situation, but that when he gets into this role, he'll take sort of a closer look at it. sort of a quintessential pivot from the question, if you will, David. We're accustomed to that in Washington. But again, I think he is. I mean, he's touted to be more moderate than some of the other folks who the administration were looking at for this position. But again, it is a big question of whether kind of the politics, especially the politics within the Democratic Party, led by Senator Elizabeth Warren, whether they will allow him the freedom to really take a closer look at some of these capital requirements and soften them, which of course is what the market and the bank lobbies want them to do.
And finally, Libby, we of course have a midterm election coming up in November, and most people we talk to say it looks like the House of Representatives might well go back to the Republicans. The question is the Senate. What have we learned so far from the primaries we've had? We just had 5 this last Tuesday.
Yeah, I think this is really important, actually, David. I think that the conventional wisdom is probably right that the Democrats are going to lose the House. But the Senate, though, is really much more of a toss-up. I mean, you look at the prediction markets, and they have odds of like 80% of Republicans taking back the Senate. It's really too early to make those informed predictions, just because, to your point, so much of this will depend on how these Senate primaries turn out. There's an important one in Pennsylvania this past Tuesday, where now the 2 Republican Senate candidates are kind of neck and neck. It will come down to the absentee ballots, probably will go into some sort of recount territory. Lieutenant Governor on the Democratic side, Lieutenant Governor Fetterman won. The fact that they're sort of Republican infighting will likely give him a little bit more of a head start from a campaigning perspective. But it's places like that, Pennsylvania, North Carolina, Arizona, Wisconsin, that folks really should be focused on, because those will likely determine the candidates who will likely then determine whether Republicans take back the Senate or not. So way too early, I think, to make, again, some of those informed predictions that some of the markets feel emboldened to do so early on.
Boy, Libby, that was a great survey. What's going on in Washington? Your mic go on. That was terrific. Always wonderful to have you. That's Libby Cantrill. She's Pimco's head of public policy. Coming up, are we talking ourselves into a recession? We talk with Bloomberg Editor-in-Chief Emeritus Matt Winkler. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Now, keeping you up to date on news from all around the world, we welcome Mark Crumpton. He's here with the first word.
David, thank you. As we've been mentioning, President Biden is in South Korea, where his immediate focus was on the semiconductor shortage that has dragged on the global economy. The president toured a Samsung factory that has some of the biggest chip production lines in the world. Samsung is breaking ground this year on a semiconductor factory in Texas. In a sign of Russia's urgent need to increase its war effort in Ukraine, its parliament says it would consider a bill to allow Russians over 40 and foreigners over 30 to sign up for the military. Russia has suffered huge setbacks and heavy losses of men and equipment in the 86-day-old war, in which Ukraine has mobilized practically its entire adult male population. Pimco and BlackRock are among the firms set to start debt talks with Sri Lanka soon. Bloomberg has learned that AllianceBernstein, T. Rowe Price, and Wellington are also among the members of a creditors group. Sri Lanka fell into default this week for the first time in its history. An economic meltdown has led to protests and a political crisis. The head of responsible investment at HSBC's asset management unit has criticized the finance industry for worrying too much about the environment. Stuart Kirk told the Financial Times conference, quote, "Climate change is not a financial risk that we need to worry about. There's always some nut job telling me about the end of the world," end quote. HSBC disavowed the remarks, saying they do not reflect the bank's views. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Recession, something we hear a lot about these days. Is it coming? What's the likelihood of a recession? And if so, when will it be here? Well, Matt Winkler, our editor-in-chief emeritus here at Bloomberg, has actually taken a look at the question, looked at some of the numbers, and has some answers to some of the questions about how likely it is. So, Matt, thanks so much. You've got this great piece on the Bloomberg today. Take us through it.
Well, first thing you do is, since 2020, take a look at, because we can, we're a great aggregator, 150 news sources on the Bloomberg, and we can see that the word inflation totally overwhelms strong economy. In fact, as inflation went up since 2020, strong economy went down. Now, the fact is, as you well know, we've got unemployment at pretty much a 50-year low. We've got the economy still growing strong. And here's the greatest part of it. There are 77 economists who contribute forecasts to the Bloomberg routinely. None of them see a recession in the next 3 years. None of them see growth, getting below 1%. They see it 2% or more. And they also see inflation ebbing from its high of, 8% right now. So just the context, if you will, of where we are, where the economy is, and where 77 economists is not an insignificant number, telling us this is what they expect. So it's a bit of a disconnect and dichotomy from what the headlines say routinely, even on the Bloomberg.
None of them see a recession in the next 3 years. At the same time, it's not a bipolar decision. There's a bell curve to all of these things. And most of the economists we talk to say the likelihood of a recession goes up as you get into year 2 and year 3. In the next 12 months, no, not going to happen. Maybe next year, we have people say maybe a third of a chance, a half a chance, things like that. What's the distribution?
So what's interesting about our data and about the economist forecast is not a one of the 56 quarterly forecasts, if you like. Economists make quarterly forecasts. Not a one sees a contraction in this 3-year period. That's over 7 quarters. Not a one is actually suggesting that we're going to have runaway inflation like the scourge of the 1970s. In fact, they see inflation diminishing as we get further out, 2 years from now, 3 years from now, to be a third of what it is currently. So when you talk about distribution, even there's kind of an equanimity about the outlook that is just not apparent in this just in.
So, Matt, take a look at it a different way, which I know you've done, which is history, because that's another thing you do in the Bloomberg, and look at past experiences. And if you look back at past experiences, there's some indication that there's reason to be concerned about a recession. And we've seen it different ways in terms of how much the stock market has fallen. It's fallen and not come back up. We've also seen it in terms of what happens when we have this level of unemployment, this level of inflation, and you have to have the Fed funds rate go up that high. History would indicate there may be a risk here.
Yeah, although, if you talk to our own economists, they'll tell you that if you really want to be informed about where we are, you probably have to go back to 1918 to when we had the Spanish flu. So that's not going to be very helpful to you or anyone else at the moment, because that's a long way away. Having said all that, there's a marked difference between where we are today and where we were in the 70s, where we were at the end of the dot-com bubble, which was the end of the 20th century, where we were in the run-up to the financial crisis. Where we are today, interest rates are very low. They're so low that corporate America today has debt ratios that are probably the healthiest that they've been really any time in our lifetime. And then you look at households, again, because interest rates are so low, there isn't the leverage that there was, leading to the financial crisis in 2008. So actually, corporate America and household America are healthier from a debt perspective. And, historically, it's the bond market that's canary in the coal mine.
Right. Well, the bond market seems to be stabilizing some, and actually bonds are back on a bid now at the moment. But let me ask you one last question about that low interest rate. We all like low interest rates. That's great. At the same time, the difference between the interest rate and the inflation rate is at alarmingly high levels. And some people are saying that's a real risk going forward, because that means you've got to get the interest rate up a lot to get that inflation rate down.
Absolutely true, except for one thing here, is if people really were panicked about what you call the inflation-adjusted or real interest rate, you probably would see interest rates actually rising precipitously, as they did in the 70s. In fact, interest rates, as you well know, are not that volatile by comparison, and there's a reason for that. The Fed has said we're going to do whatever it takes to bring inflation down. What that means in the market, if you look at the yield curve from short term to long term is that there's still confidence in the Federal Reserve. And as long as there's confidence in the Federal Reserve, you're not going to see interest rates soar to the extent that they did back in the 70s.
Well, it's a fascinating piece, and I really recommend it to bring some perspective to this discussion about recession. Thank you so much to Matt Winkler. He's Bloomberg News Editor-in-Chief Emeritus. Coming up, stocks trying to recoup some of what they've lost this week. We go through the markets with Kriti Gupta. This is Balance of Power on Bloomberg Television and on radio.
Next week, Bloomberg is live from the World Economic Forum annual meeting in Davos. Against the backdrop of war, climate crises, economic upheaval, and a global pandemic, our all-star team is there, reporting on the solutions being discussed by more than 2,000 leaders and experts from around the world. Coverage starts May 22nd on Bloomberg Television and Radio.
This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It would be an understatement to say that equities have had a rough week this week. And earlier today, they were trying to claw their way back. I'm not sure they're making it. But to tell us, here's Kriti Gupta.
Well, they're not making it yet, and this is a major problem we're looking at. We're actually on bear market watch, David. So the S&P 500 trading down 1.3%. 3850 is the level, 3837 will mark a 20% decline from the January high. We are not there yet, to be super clear, but we are certainly nearing it. So one of the questions right now in the market is simply, given the massive earnings beats down that you have seen really this week, remember Walmart, Costco, Cisco, Target, and some of the other names really getting punished. A lot of that has contributed to this decline. The question is, do we hit that bear market today, see a little bit of a technical bounce going into the weekend, or what does really the last couple of hours of trading look like? David, it can be anyone's call here.
And 38, 37, 25, I think, is the exact number.
Yes, and a quarter.
We'll keep watching that and tell everybody if it happens. In the meantime, we had President Biden over in South Korea today talking about microchips from a Samsung factory. How are we doing with microchips?
Not well. And it's interesting because when Joe Biden did actually go onto the Samsung plant, you did see this major rally in a lot of these big heavyweights, Advanced Micro Devices, NVIDIA, Intel, et cetera. They were all green the screen, actually helping lift futures. The idea there being that more demand and they are kind of short of capacity, that some of these moves in South Korea and these alliances in Asia will actually help them meet that capacity. But David, it looks like a lot of these names that were green on the screen a couple of hours ago have completely turned around. NVIDIA, for example, down 6.4% and dragging the entire market down with it. But there is a growth story here. It's not just about the earnings. It's not just about capacity. It's about demand at the end of the day. And if growth and recession fears are fueling the gain, then or were fueling the gain, then might fuel the drop as well.
That's what I was going to ask. This is a supply problem more than a demand problem, I suspect.
It does look like a supply problem. And I think because of that and that lack of capacity, you do have demand kind of in the background. And the way it's showing up a little bit more macro is in the 10-year yield, actually. We've seen 2 weeks almost of declines in the yield.
Yeah, how about that? Thank you so much to Kriti Gupta for that update on the markets. Coming up, Russia cuts off natural gas supplies to Finland. We go through the latest moves in the Ukraine war with Jane Harman, President Emerita of the Wilson Center. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. For news from all around the world, we turn now to Mark Crumpton here with the first word.
David, thank you. President Biden is in South Korea today as part of his first trip to Asia as president. Mr. Biden is working to bolster supply chains that would reduce reliance on China.
The alliance between the Republic of Korea and the United States of America is a linchpin of peace, stability, and prosperity for a region of the world that we seek.
The president's 5-day trip includes Japan. His goal is firming up support for Ukraine and countering security threats posed by China and North Korea. More aid is on the way to Ukraine. Group of 7 finance ministers meeting in Germany are set to agree on more than $19 billion for Ukraine to guarantee the short-term finances of its government. That's according to Germany's finance minister. The U.S. Senate has passed an aid package for Ukraine worth more than $40 billion and sent it to President Biden for his signature. The administration said it was providing Ukraine with another $100 million in military assistance. By one account, the world has only 10 weeks' worth of wheat consumption in reserve, the lowest since the 2008 financial crisis. That's according to agriculture analysis firm Grow Intelligence. The firm's CEO, Sarah Menkers, spoke to UN Security Council meeting on food security. Other estimates aren't as dire, but high crop prices are putting unions at risk while grain supplies fall. Former New York City Mayor Bill de Blasio is running for Congress. De Blasio told MSNBC he'll seek the Democratic nomination for 10th Congressional District, which includes parts of Manhattan and Brooklyn. The primary election will be August 23rd. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. We're going to turn back to Ukraine now, where the fighting continues over in the east in the Donbass region, with no apparent victor in sight at this point, but a lot of fighting going on. In the meantime, there are developments in the rest of Europe surrounding Ukraine. And to go through those with us, we welcome now Jane Harman. She's former congressman from California, President Emerita of the Wilson Center, and author of Insanity Defense: Why Our Failure to Confront Hard National Security Problems Makes Us Less Safe. Jane, thanks so much for being with us. The news this morning, I think, was probably that Finland has been cut off from Russian supply of natural gas. This is the third country, by my count at least, that's been cut off now. What is Russia doing there? And are they going to be able to put enough pressure on Western Europe to get them to back off some of the sanctions?
Russia is flailing because Russia is losing this hopeless, hapless, ridiculous war in Ukraine. And here come the new members to NATO. And I think Europe is in process of weaning itself from dependence on oil and gas from Russia. So Russia's going to lose that market, which I think is $1 billion a day at least. So I think Finland will manage it, and I think full steam ahead to join NATO. Certainly the Biden administration has endorsed that. Letters have been sent to Congress, and Biden, I think, is doing the right thing, by the way, David, to be in Asia right now and trying to capitalize on the fact that all of Russia's mistakes in Ukraine, supported by all of China's mistakes, including supporting Russia, are a new opportunity for the U.S. to lock in trade and strong relationships with Asia countries.
I want to come back to that Asia trip because that's really important, that so-called Asia pivot. We've heard so much about it. But just one more here on Ukraine. What do you think the most likely future in Ukraine is? Is it basically something of a standoff, sort of a long, protracted war where neither side wins?
Well, I don't know what winning means at this point. I think that the status quo ante would have been better for Russia than where Russia is. Russia is still doing this gigantic war of attrition over communities like Mariupol, which have been basically destroyed by Russia. So I don't know what kind of victory that is. They had been destabilizing these parts of the Donbass for 8 years. And they may now declare, so the New York Times says, that they're acquiring them. Well, there's not much to acquire, and I'm guessing Ukraine won't agree. So yeah, in some sense, it's a war of attrition. But in another sense, it's pathetic. A third of Russia's military prowess has been degraded. It's lost many generals and 25,000 or more young men. Their mothers can't be happy with that. Its economy is in the trash can. And, I don't think winning is even conceivable for Russia. Winning for Ukraine, sort of, meaning they've pushed Russia back. Hopefully, they will find a way to rebuild their country. And the good news is that Europe is finally united. And NATO is reinvigorated, as is the EU. And NATO will now have new members. And I do give the Biden administration credit for bonding together with partners and allies in Europe. And that's a good news story. So just one more point, David. I know you're going to get back to Asia. But I think U.S. global leadership is also rebounding. It couldn't come soon enough. There's no way that we can pivot out of the world, wherever it is that we may latch onto. We're in the world, and our global leadership is essential to have a peaceful world and one based on democratic values.
And Jane, I think that sort of takes us back to the trip to Asia in this sense, global leadership for the United States. It can't be lost on China, the addition of 2 new members to NATO, the extent to which the West has come together there, as President Biden goes over to South Korea and then to Japan. What is President Biden's objective in this trip?
Well, I think his objective is to meet with the so-called Quad, this group of Japan, India, and Australia and us, and also to meet with South Korea. Very good move given the saber rattling or the nuclear weapon rattling of North Korea, and build a new or a renewed trading and security bloc in Asia, which we need. And he's taking advantage of the fact that China is totally back-footed here. China's new economic policies are failing. Tech investors are leaving. The blockade of cities over COVID is not working. And its support of Ukraine, of Russia, is showing weakness, not strength. So I think his timing is impeccable, and I applaud him for being there right now for 5 days, so it's a long enough trip to make progress. I just want to say one more thing that I should have said about Russia. The blockade of exports of grain from Ukraine to the third world is shameless and, again, feckless, because these developing countries are going to blame Russia for this, as they should. It is, however, showing finally that the UN is awake, and maybe, just maybe, finally the UN will send some peacekeepers to monitor the exports of this grain to places that are facing severe food insecurity challenges.
Yeah, we probably haven't paid enough attention, actually, to the naval aspects of that war over there and the blockade, effective blockade of Ukraine. But coming back to China for a moment, do you expect us to see some reaction from President Xi? Often when he sees something like this go on, he doesn't just let it go.
It's possible. Yes. I mean, they may be, I can't quite think what they would do, but crack down further on U.S. investment in China, which hurts them. I think something they're looking at is Russia. The degrading of Russia will make Russia a likely vassal state of China, but be careful what you wish for. Do you really want Vladimir Putin covering 11 time zones right next to you, not welcome in any world forum? I mean, really? So I think China's back-footed here, as I said, and flailing a bit. I think Russia is flailing more, and this is a huge opportunity for Western leadership, which is desperately needed around the world. And pivoting anywhere is not the right answer. Being where we are needed and where we can shore up democratic values is what we should be doing all over the world.
If China is back-footed, what does that say about President Xi? Because increasingly he's become identified with China. He has identified himself with China. Frankly, l'état moi, I think they say. So what does that mean for President Xi as he asks for a third term?
I think it's bad news for President Xi, and I think I don't know what happens to Putin in Russia. I'm not calling for regime change, but I'm saying these people who get involved or steer their countries in bad directions may pay a price for that.
Okay, Jane, it's always such a treat to have you with us. Thank you for your time. That's Jane Harman, the President Emerita of the Wilson Center. Coming up, we go through what President Biden is trying to accomplish during his visit to Asia with Eswar Prasad of Cornell and the Brookings Institution. This is Balance of Power on Bloomberg Television and Radio. We promised you we'd keep you up to date on whether the S&P actually dipped into a bear market territory, and it happened while we were on break. If you remember, it was at 38.37 was the lane, and right now it's trading on my Bloomberg at 38.31.13. It just happened a few moments ago. To bring us up to date on what's happened and what significance it is. And by the way, this is intraday, I'll emphasize. That's not necessarily where it's going to close, but right now it's below it. We welcome Abigail Doolittle. So Abigail, tell us about what's going on.
Yeah, well, this is really a historic moment. This is the first bear market that we've seen in the S&P 500 since March of 2020. But in terms of the definition of a bear market, this is the most traditionally accepted definition, down 20% from the last peak. You could also take a look at it, though, from a sector standpoint. Many analysts take a look at it that way. And on the year right now, the majority of the sectors are now down 10% or more. So there are some analysts who would say we've been in a bear market for the S&P 500. Or you were talking about how one of our colleagues, John Authers, was talking about it from a valuation perspective. Right. The NASDAQ has been in a bear market for many weeks. The Russell 2000 has been in a bear market for quite some time. So it's almost like the S&P 500 is catching up with some of the bearishness, the price action that we've seen in other markets.
The question I always have is, and then what? I mean, what does that say? Does that say something about a possibility of recession? Does it say something about bottoming out? Does it say something about when it starts to come back?
Well, if we take a look at the last couple of bear markets, there was the one in 2020 that was very brief, although very deep. If you go back to 2008, that was obviously a horrible one. The S&P 500 down 50% in a very short period of time. However, if you go back to 2000 to 2003, and this market action reminds me of a blend of those two time periods, 2000 to 2003, it was really a rolling bear market where stocks would go down about 20%, they would come back up 10 to 15%, go down 20%, and so on and so forth. Some of that, interestingly, David, as we've been talking about this week, had to do with the then big tech companies, including Cisco and EMC. These companies, they just could not provide guidance that was reliable because the corporate IT spending outlook continued to decline. So they would lower guidance, but they would have to do it the following quarter. Are we in a time period now where that's happening, but the bogey is not the corporate IT outlook, it's inflation? If inflation is unmanageable, as we know right now for some of the big retailers, if that proves to be the case going forward for another quarter, it could really be an issue. You could continue to see the floor drop on the profit outlook.
Is this a delayed reaction to the run-up in the 10-year yield? Because the 10-year yield really jumped up, and now it's actually coming back down again. You'd think that with the 10-year yield coming back down, it might help the stocks, not hurt them.
Yeah, well, that's a great point. It's interesting. The 10-year yield in terms of that run-up to 320, that was probably pretty overdone, and I think that that's the understatement maybe of the year. It would have been much more reasonable for the 10-year yield to, I don't know what level to have stayed below, but 2.5% in terms of expectations around the Fed. But it overshot so much to the upside. It's now coming in. And then on top of it, when you have a stock sell-off like this, remember Haven Bonds, you know, there's a bid for bonds as well. So that's something that's bringing it back in. But if you remember the first time that the 10-year yield went from about 50 bips to above 150, and it went to 175, and then it quickly came back down toward 110, and there were a lot of folks saying it was going to go below 1%. So we're just seeing these huge swings based on the uncertainty.
Yeah, the other question, just to leave it with you here, Abigail, is whether this is interest rates or whether it's something more fundamental in the economy. Because we did have those results from the likes of Walmart and Target this week that I think made some people nervous.
Yeah, well, you know, in terms of the economy, we have to remember the GDP, about 2/3 of it is the consumer. There are mixed signals on the consumer, but overall, I would say based on this week and what we know right now, the consumer is probably okay. U.S. retail sales in the month of April, they were stronger than expected. A lot of these companies, even though they couldn't manage rising costs, they beat on sales, so there was consumer demand. Yes, there was more reliance for lower end and store brands, but then you have some of the nice to haves like your Canada Gooses and your Uggs, Deckers, Foot Locker. These companies are you know, really doing okay relative to sales. Plus, if this was an earnings week for the airlines, it might be a very different conversation. Because remember, United Airlines earlier this week pre-announced the upside, saying that they think demand is going to be huge. So you know, maybe that's where a lot of the money is going to, and a lot of people have been looking for that, for it to come out of goods and go into services. So we have more information to be seen.
Okay, thank you so much, Abigail. Really appreciate you jumping in on that dipping, at least in the intraday, into a bear market on the S&P 500. So coming up, we're going to be joined finally by Eswar Prasad of Cornell and the Brookings Institution to talk about trade deals in Asia. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. President Biden has begun his first Asia trip in South Korea, beginning with a visit to Samsung plant and praising investment in the United States in semiconductor manufacturing. To take us through what the president hopes to accomplish overall in his Asia trip, we welcome now Eswar Prasad. He is professor of trade policy at Cornell, senior fellow at the Brookings Institution, and author of The Future of Money: How the Digital Revolution is Transforming Currencies and Finance. So, Professor, thank you so much for being with us. There is the semiconductor semiconductor issue, but more broadly, we hear that President Biden really wants to pursue something called the Indo-Pacific Economic Framework. What is that, and what are his prospects?
So as one thinks about this trip to Asia, I think the broad theme here is really it has the right objectives, but is beset by a policy quandary. And the Indo-Pacific Economic Framework perfectly epitomizes that difficult balance. What the Indo-Pacific Economic Framework is trying to do is to get around the fact that there are domestic limitations that might prevent the Biden administration from signing on to a trade treaty with any of the Asian trading partners that the U.S. has, but at the same time try to re-engage with the region. So what the framework is supposed to set out is a set of labor, environmental, and other trading standards, but without the price of market access or any other incentives for the countries that might become part of this framework. So it's a tough sell, really, to get people in the region re-engaged in terms of U.S. involvement, while at the same time not promising them anything concrete. Now, of course, China has been a lot more active in the region in terms of setting up its own trade deals. The U.S. backed away from the Trans-Pacific Partnership that the other countries that had originally signed up to it went ahead with it. So what the Biden administration is basically trying to do is to salvage some engagement from the ashes of the TPP, which the previous administration basically scorned.
Well, I guess my question in part is to that point, are we too late? Because as you say, we had the TPP, we walked away from it after we had a deal. China has stepped in. Are we too late? Or is China perhaps in some places overplaying its hand, if I can put it that way, and made some countries over there a little bit nervous?
For most of the countries in the Asian region, it's a tricky issue because on the one hand, they would prefer not to go too deeply into the economic or geopolitical embrace of China. And the fact that the U.S. seemed to be stepping back from the region was forcing them to do that. I think they would like to have a closer relationship with the U.S., but given what has happened over the last 4 or 5 years, there is certainly concern among the leaders in the region whether they can trust the U.S. to really look after their back and whether they can shy away from the economic might of China. Many of the countries in the region, I think, would like to maintain a strong relationship with the U.S., but I think the U.S. is not proven to be very reliable in terms of meeting the deals of treaties that it pulls other countries into. So I think that is going to be a major barrier, but certainly it's a positive sign that Biden is in the region and is meeting with many of the key leaders and trying to re-engage. But it's still going to be a tough sell.
Eswar, you just made, I think, a very important point, which is part of what goes on as we try to woo countries, China does, is a reflection of the relative economic might of the two. China has really been in the ascendancy, but now we're seeing that, in fact, it may well be that for the next year or so, the United States actually might grow faster than China. Does China still have the economic might that it did a year or two ago?
Certainly, there are some elements that have changed. The U.S. economy, despite high and rising inflation and flailing financial markets, as you pointed out, is still an economic powerhouse. And the notion of the Chinese economy catching up, either in terms of economic size or in terms of financial might, does seem to be further off into the future than it seemed a couple of months ago. But the reality for the countries in the region is that China is still by far the dominant economy in the region, is still growing at a pretty decent clip, does still have a rising middle class, which is going to be very important for the supply chains that are threaded toward the region as a consumer market and so on. So they cannot quite afford to ignore China. And China is becoming quite financially powerful as well. Now, certainly the events of the last few months have set at rest the notion that China is going to become a power that rivals the U.S., but still, if you have such a large economy sitting right on your doorstep, it's a little difficult to shy away from it. And that's the quandary that most of the countries in the region face.
And finally, Eswar, how does the quest for President Xi for a third term play into this? On the one hand, is he more vulnerable than he was, not necessarily to lose his job, but to have more rivals around him? Or will he be more aggressive in his policies?
Now, China seems to be looking more inward, and what President Xi seems to be keen to do is make sure that China becomes more self-reliant and less vulnerable to external factors in particular, and that might provide an opportunity for the Biden administration to increase its engagement in the Asian region, because China is beginning to look a little more inward, and that creates an opening. Now, whether the Biden administration can strategically exploit that in a way that increases U.S. influence or brings back U.S. influence, I think it's really the question of the hour.
Professor, thank you so very much. It's always great to have you with us. That's Eswar Prasad. He's Senior Professor of Trade Policy at Cornell University. Check out the Balance of Power newsletter on the terminal and online. Coming up, we're going to continue Balance of Power on radio. In the second hour, we're going to cover that U.S. Open at Southern Hills in Tulsa. Stay tuned for that. This is Bloomberg.